So we are here with the DigiWealth Minute. We are here with my man John. He is a pioneer and an innovator in this space. And we would love to hear about how you're helping credit unions tackle the large task of digital assets and stablecoins.
Yeah, so this is our firm's been around about 16 years. We've been serving credit unions for 16 years. Our specialty, we began, really as experts and authorities and partners in helping credit unions get more out of their core processing systems. So there are a lot of credit unions that spend a lot of money on good modern core processing systems. And we developed a business for about 10, 12 years, mainly helping them control data, use data to improve their digital experience, and to deliver relevant products and services through what their modern cores can do for them in terms of utilizing information and extending information out over APIs. Around 2014 or 15, I started paying attention to Bitcoin at the time, and then everything that's come since then. And we started to be really aware of and concerned about the way that digital assets could be very disruptive to financial institutions. And we saw that basically, users had 2 or 3 ways at the time. Now they've got 4 ways that they can store digital assets. External wallets, cold wallets, online exchanges, right? Or software wallets, hardware, software wallets. So we felt like those were not great solutions for members that own digital assets and want to have non-dollar wealth. We know now that there's about $2.5 trillion in non-dollar wealth living outside the financial institution sphere. People are moving money out of banks.
Exactly.
A few years ago, we started seeing that deposit outflows were becoming a big problem for many of our clients. They weren't exactly able to put their finger on why or where it was going. And so we started to hunt down that, in fact, our average client was seeing about 3 to 5% of their deposits flow out of their institution per month to crypto exchanges or to crypto wallets. And so we wanted to build a way for credit unions to use their modern core to connect into these new money networks so that they can take all the benefits and all the security and encryption and redundancy and high availability and operational investment around their core banking system where they already process money.
Yeah.
And they could begin to service new forms of money that members are moving into quite aggressively. So one of the things we do is we provide educational services to credit unions to get executive teams and board members and technology folks in credit unions up to speed on what's really happening with digital assets and how is it already impacting their institution, and just what is the magnitude of the issue, of the risk, of the threat to their institution in terms of deposit outflow, eroding interchange income, remaining competitive with tier one banks that are rolling out crypto services, alternative payments, things that are taking place with Block, Square, Walmart, they're all moving toward digital asset networks for payments, for speed, security, cost, efficiency, reduced fraud. And so we feel like this is a space where credit unions really need to get off zero. And the best way for them to do that is use their core technologies and their expert teams they already have and just plug into digital asset networks using that power of their modern core. So that's the coin to core product that we built. It's a gateway to connect any credit union on a modern core to the whole ecosphere of digital assets, which would include stablecoins.
And that's beautiful because at the end of the day, I think a lot of the worry is around, okay, we have another technology we have to somehow figure out how to implement. Where in my experience with majority of credit unions I talk to, they're not implementing the current technology well.
Right.
They're not executing quickly. They're not executing efficiently.
Yeah.
And so when we look at the new technology that we have to adopt, we're looking at the headache, which causes us to stall.
Yeah.
And so what would you say to the credit union out there that's saying we're not really the most efficient at completing these technology tasks? How would you empower or educate them to say, this is what you need to make a decision? This is an easy way for you to get started.
Yeah, this world of digital assets is very high risk because right now most credit unions are in that situation you just described. They don't know what to do about it. They're not receiving a lot of guidance from their regulators, either
Mhm.
state or federal. And so most of them are pressing the easy button and picking a third party vendor that they can
Yeah.
bolt on an external wallet or something like that. The risk in that is that in this world of digital assets, whoever is processing the data, the digital asset data, vendor A, B, C, whatever, or you're outsourcing to like a white labeled Coinbase app,
Mhm.
that whoever's processing that data, whatever vendor is processing that data, they now own the financial relationship and the consumer relationship. So
Mhm.
that when members move money into the digital asset world, the institution that gives up that data, that gives up that money, they're no longer the settlement institution.
Yep.
So this is a big thing that we're trying to teach credit unions is you can't solve this problem of digital assets by pressing the easy button and bolting on a wallet. You're going to have to make sure you have a more thorough,
Mhm.
thought out, strategic approach to it so you can stay in all facets of the money business. You've got to retain those deposits, right? And then you
100%.
got to be able to lend against them, do payments against
Yes.
them, replace your eroding interchange income. And we know that we can do that by helping them connect their modern core to these digital asset money networks and start to use that liquidity and that wealth inside their existing operation.
Yep, and just starting one piece at a time.
Yeah,
Starting with just being able to do the custody piece,
yeah.
get very comfortable there,
Yeah.
then start with the lending, which probably would be the most
I think
effective.
it's coming this year. You're going to start to see some very big names announce, tier one banks are going to announce that they're going to support Bitcoin custody and Bitcoin backed lending products.
Mhm.
Your members can already go out to Coinbase and get up to $1 million loan in less than 10 seconds
Yep.
by just putting their Bitcoin on deposit at Coinbase. You're going to see major institutions roll out that same type of functionality. So it's really important for these financial institutions to recognize that if they want to if they want this digital wealth, this non-dollar wealth to be part of their local economic engine, they're going to have to figure out how to plug into these networks and use that wealth. And we believe we've made that as easy and secure as it can be through the Coin to Core digital asset gateway that just lets them plug that modern core into the digital asset world.
Well, I'm very impressed where you guys are. I've been in the industry since 2017,
Hmm.
so I definitely jumped in later than you.
Yeah.
But our name, DigiWealth,
Hmm.
right? It is digital wealth
Yep.
because we understood that money is changing. Majority of the money in the world is digital,
Yeah.
even if we were just to discuss
Hmm.
regular currencies. And so the people themselves need to understand this is how we're going to generate for the futures to come,
Hmm.
and the fact that folks are looking to house their money differently. And that was a really great topic that you guys discussed on,
Yeah.
was the fact that people that are in the digital asset space think about finances very differently,
Very literate.
especially with the risk parameters.
Yeah.
So in the credit union world, folks are hiding behind, well, since it's not insured,
Hmm.
people will not invest in that.
Yeah. Not true.
And that's not true at all,
Not at all.
because I made most of my money
Hmm.
teaching people to access an account that gave them 8% savings.
Hmm.
And they were here for a very long time. You probably know who they are. And they recently just came back in as of 3 weeks ago. They're offering
Hmm.
12.5% as long as you deposit $5,000 in stable
Hmm.
coins.
Yeah.
So where do you see the yield side chasing? I personally believe we're going to see CD rates have to climb higher
Mm.
to be competitive with the market.
Yeah.
And I don't think anyone's ready or discussing that. Could you provide
Oh,
any
I think that's
insight?
the logical conclusion is that the traditional deposit products are going to have to try to compete. I say try to compete because, one of the reasons that these new money networks like USDC, Circle, Tether,
Hmm.
other stablecoin products, and even other digital asset products, one reason that they can produce a higher yield is that their fraud and cost of operations and cost per transaction and their actual cost for running the data centers are much lower
Yep.
than the traditional infrastructure. So I think you're right that the legacy instruments and the traditional financial system will have to try to compete if it wants to retain deposits.
Hmm.
Unfortunately, I don't think the foundational economics of the electronic dollar system will allow it to be as efficient or secure. You're
Hmm.
just not going to be able to settle as quick and cheap and securely as you can settle on these new rails if you want to call them
Absolutely.
that. So that's how we look at the digital asset networks like USDC, Tether, Bitcoin, Ethereum, Solana, XRP, Litecoin, all
Hmm.
networks that we support right now. We would consider those all, tier one digital asset networks with real utility and real market cap and liquidity. And we think that credit unions are going to have to figure out how to offer products and services and process transactions and service wealth on those networks so they can be competitive by using the economic and security and technology benefits of those networks,
Yep.
right? They won't be able to compete against those networks with the economic fundamentals of the electronic dollar system.
Hmm.
It'll be too costly to settle, too much fraud, too expensive per transaction. But if they take their modern core and they plug into these new money networks, then
Exactly.
they'll be competing with the same ingredients technologically and economically,
Hmm.
and they'll have a strategic chance in a pretty turnkey fashion. And the great thing about our company is we converted it into a CUSO a few years back through the
Hmm.
sponsorship of some of our owners because our owners wanted to ensure that there was a digital asset gateway and switch that
Hmm.
was owned by the industry, for the industry. So earlier today, you heard one of our owners say, like, one of the things credit unions can do well when they want to is they can come together and solve these problems cooperatively.
Hmm.
And that's our goal, is to give them a cooperative way to address the need and the urgent need and the demand to get connected to these networks and service the wealth that's in them, right? You mentioned the stable coins. Most credit union execs won't know that there's $255 billion
Yeah.
in liquidity, dry powder, sitting out there in stablecoin networks right now.
Hmm.
And if you assume 10% capitalization across the entire credit union industry, that would be roughly the same amount of capital from the entire credit union industry, right? That's currently sitting in just two global stablecoins.
Yeah.
So I said earlier today, stablecoins, you can define them a lot of ways. One way they can be defined is they're an off ramp where members move deposits out of your traditional institution
Hmm.
and get ready to do something in the digital asset sphere. And that's why we need credit unions offering USDC accounts.
Yes.
We need credit unions offering USDT accounts. We need credit unions providing Bitcoin savings accounts. We need, because there's $2.5 trillion in money already living outside this system.
Hmm.
The younger you go in age demographics, it's going to be harder to convince these kids and these young borrowers and savers that doing business with a traditional institution that's more expensive, less convenient, right?
Hmm.
Less return, less yield. These digital asset users are very literate, very financially literate, and it's going to be a problem for FIs.
I agree. So when I originally came across Bitcoin, I was like, we're finally going to go back to a gold standard.
Yeah,
Yeah,
something like it.
that's why like
Sound
mortgage
money,
sovereign. Yeah,
sound money. Yeah.
we're like, we're going to get there. We're going to
Mhm.
change. And it wasn't actually Bitcoin that made the first introduction. It was another product that was backed by gold
Mhm.
1 to 1.
Yeah.
That's what made me so excited is the fact that
Tokenized gold. Yeah.
exactly.
Mhm.
And they had a really cool piece where they had actual tender
Mhm.
and it had the bullion gold inside of there. So
Yeah.
you had something that you can actually utilize on the digital side and the physical
Yeah.
side. And with most people using cards, we're already there.
Mhm.
And so I will say that my son, without my influence, purchased his own
How old is your
Bitcoin.
son?
He's 15 now,
Yeah,
but he was
yeah,
10 at the time.
yeah. My
He
son's 14 and a half.
yeah,
Yeah.
he was 10 when he decided that he wanted to start saving in Bitcoin
Mm-hmm.
and how easy it was for him. He had a payment app on his phone
Yeah.
for a year without me knowing.
Yeah.
So these kids really are becoming very fast and aware of how to use products.
Yeah.
And if it's not easy to use immediately,
Yeah.
it's going to be a problem.
Well, you said a really key word there. I'm going to be awkward and look into the camera. Listen to that story, because that is exactly how my 14-and-a-half-year-old son and all of his buddies look at Bitcoin.
Hmm.
In this conference, all these financial institution executives, they're going to be very inclined to look at Bitcoin as a speculative investment, like a tech stock.
Hmm.
But you really nailed it right there, and it corroborates my own experience with my son and all of his, Boy Scout friends that have to take personal finance merit badge and stuff. They're looking at these technologies as modern savings account tech,
Hmm.
and it's very easy to see why, because there's now a 16-year track record where they can look at the average growth rate for these assets is 40% per year,
Yep.
factoring in all the horrific years that it's had, over a 16-year period. It's a 40% year average return. There are no products in traditional financial institutions
Not
where
even close.
14-year-olds can get 40%. So now I have a 14-year-old son, probably like you. He's sitting on thousands and thousands and thousands of dollars in his wallet. And unless financial institutions figure out how to plug into these networks and
Mm,
service wealth on them, those kids are never going to bring that wealth back into the
they
community
won't.
economy to catalyze anything. And we need them to. We
Yes.
need that liquidity to come into local economies and provide for loans and businesses and merchant payments and all kinds of other stuff. Otherwise, it's going to be trillions and trillions and trillions outside the system. You know?
You're 100% right. Because the one thing that I do wonder about is how will the community impact? As CMO at the previous credit union I was at, we did a lot of community events.
Mm-hmm.
So if all those deposits and interchange decrease and we start to really struggle,
Yeah,
that's going to impact the school plays, the sports that we provide,
you nailed it.
the nonprofits. And
Yeah,
so our communities are actually going to be hurt
yeah,
by us being unwilling to take the leap into the realm of risk of just educating ourselves to know that this is dangerous, but if we execute it well, it's actually going to make our lives easier
amen.
in the long run,
Yeah,
and we're going to have a successful future.
amen. I mean, that's the whole deal is we've got to do what credit unions do, which is use assets cooperatively, locally, mutually. We need to move beyond this mindset that our only job is to service electronics with an institution like a credit union. They
Yeah.
understand all the non-institutional structure of Bitcoin,
Hmm.
but they want to they'll make a trade-off there. They're willing to make a trade-off to have a trusted local partner that's going to help them protect that digital wealth
Hmm.
and put it to use in a decentralized fashion.
I think the core of the crypto enthusiast industry is a cooperative,
Absolutely.
where
Yeah.
the base core of what connects us all together is saying that we can do this together,
Yeah.
and the natural evolution is a crypto credit union.
Yep.
And so my future plan in 2028 is my goal is to actually put in an NCUA application for a crypto credit union. And
Awesome.
to
Yeah.
be the crypto credit union for credit unions
Yeah.
that might have still been too slow,
Yeah.
but we have the trusted advisors, the trusted information
Mhm.
in order to help them execute and keep a plan.
Well, cool. We have a great piece of technology to plug you into all the networks that you need to be
That's
connected
why I
to
was
do
so
that.
excited to hear
Yeah, it
you
was
talk on
awesome.
stage. I always said he just figured out half my battle.
We figured, well, yeah, I mean, we're honored to be doing this on behalf of the industry. We've been working at it for 7 years.
Hmm.
And we know that it's the safest, most affordable, most profitable, margin generating way to take existing infrastructure. And what we know is that the local credit union with the right core technologies can be the most secure, most efficient,
Hmm.
most valuable place for members to store their digital wealth and access their digital wealth. And that will keep local financial collaboratives thriving.
I love it. John, I have the feeling that me and you could talk all day.
Would love it.
And so I
Yeah.
would love to continue this
Mhm.
conversation in the future.
Sure.
But before we leave, can you tell us one story that's kept your heart in the credit union industry?
Oh, sure. Yeah. Well, I do this because I actually got my start in as an entrepreneur when I was 10.
Okay.
Yeah, my grandfather was a member of Red Rocks Credit Union in Colorado. I think at the time it was Lockheed Martin's credit union, Martin Marietta's credit union. And my grandfather took me over there and got me a $500 business loan so that I could go out and buy a lawnmower and a weed whacker. And then a couple of years later, I went back and got $1,000 loan, and I bought some more equipment for my buddies, and I had them mowing lawns in all their neighborhoods. And they taught me about checking accounts and savings accounts, and basically instilled financial literacy in me. Prepared me to become a Bitcoiner down the road because Bitcoiners are all about financial literacy and
Yes.
local sovereignty. But yeah, I mean, I want my son to have the same access to local financial services that I had
Hmm.
because I know the alternative. I mean, look, digital assets are going to be the future of this industry. It's either going to be one where they're accessed and stewarded through decentralized institutions like credit unions,
Hmm.
or it'll be delivered only by hyper-centralized institutions, and we will all live in financial authoritarianism and surveillance. And I don't want my kid to live in that world. I want my kid to have some economic freedom. I
Yes.
want there to be democratized financial services. And we know
100%.
that plugging credit unions into these networks is a way to preserve democratized access to financial services.
I love it.
Yeah.
I appreciate the way that you articulated that.
Yeah.
And I'm really happy that you decided to come on
Oh,
and
man, I
you did
loved
your
it.
presentation today.
It's
Thank you
awesome.
so much.
The industry is lucky to have people like you covering this topic. So thanks for doing that.
Appreciate it.
Yeah, it's great.
Thank you so
Look forward to
much.
chatting again. All
Till
right.
next time.
Yep. See you.